Hey everyone, welcome back to Corporate Decoder, the place where we break down the financials to show you the real story behind the numbers. And today we're diving into Unitil Corporation's latest quarterly report, Form 10Q for the period ending June 30, 2025. Get ready because things are getting a little complicated with acquisitions and interest rate shifts, but we'll make it all crystal clear for you. Before we jump in, if you appreciate getting straight insights from these dense corporate filings, make sure you're subscribed to the channel, and if you want to connect with other finance enthusiasts, join our Discord community linked in the description below. It's a great place to ask questions and share your own finds. Our main focus today is to decode what Unitil's financial numbers actually mean for its performance, its risks, and its future strategy. Let's get started. So Unitil Corporation is a utility holding company that distributes electricity and gas in New Hampshire, Massachusetts, and Maine. They've been busy expanding their reach. For instance, they recently acquired Bangor Natural Gas Company, which added about 8,500 customers and some goodwill to their books. This acquisition is already showing up in the numbers, impacting their gas segment revenue and costs. Looking at their financials, we see some interesting shifts in their gas business. Total gas operating revenue jumped up by a significant 31.3% in the first quarter of 2025 compared to the same time last year. This was driven by higher rates customer growth and, importantly, the addition of Bangor Natural Gas, which contributed about 4.7 million in revenue for the quarter alone. And the 6 months showed an even bigger 12.3% increase in revenue year over year. Their gas thermal sales also saw a big jump, a 19.1% increase in the second quarter and a 23.7% increase for the first 6 months of the year. This was helped by colder weather this year and, of course, more customers coming from the Bangor acquisition. Now, on the electric side, total electric operating revenue actually decreased by 9.6% in the second quarter and 14.5% for the first 6 months. Compared to last year, this might sound concerning, but a big reason is that customers are starting to buy more electricity directly from third-party suppliers, which affects how Unitil reports its revenue. But remember, their adjusted gross margin, which is a better measure of their core profitability, actually increased by 6 months. This shows that even with those changes, their underlying business is doing a bit better. The cost of electric sales went down quite a bit, a 20% drop in the second quarter and a 25.8% drop for the 6 months. This is directly linked to that shift of customers using third-party suppliers, meaning Unitil is buying less electricity overall. Operation and maintenance, or O&M expenses, went up though by 14.5% for the quarter and 19.3% for the 6 months. They attribute this to higher utility operating costs, labor costs, and professional fees. They also noted about $1 million in acquisition transaction costs in the first 6 months of 2025 related to Bangor, so that's a direct hit from their growth strategy. Depreciation and amortization expense also increased significantly, a 20.4% jump in the quarter and 26 months. This is because they're investing more in their utility plant and have higher depreciation rates, partly due to rate cases and new projects. Now let's talk about financing interest expense, particularly on long-term debt, and regulatory liabilities went up by 25.2% in the first 6 months. This is mainly due to higher levels of debt and higher interest expenses on those regulatory liabilities, likely from carrying costs on investments they expect to recover later. Speaking of debt, Unitil has a revolving credit facility which they amended and restated in September 2022, and then again in January 2025. The borrowing limit was increased up to $20.75 million as of June 30, 2025, offering them more flexibility. Short-term borrowings outstanding were $171.4 million, leaving them with $103.6 million available. They are using this facility for managing day-to-day cash needs. Let's look at the bottom line. Net income for the second quarter of 2025 was $4 million, which is a slight decrease from the $4.3 million in the same quarter last year. However, when you look at adjusted net income, which excludes those acquisition transaction costs, Unitil's adjusted net income actually increased by about $400,000 for the quarter. That's a good sign, showing the core business is performing a bit better, even with integration costs. For the first 6 months of 2025, net income was $31.5 million flat compared to last year, but adjusted net income climbed up by $1.6 million to $33 million. This indicates that the ongoing operations are improving and the acquisitions, while incurring costs, are contributing positively to the overall picture. Digging into the segment's electric operations brought in $2.8 million in net income for the quarter, while gas operations contributed $2.5 million. Gas operations are clearly growing faster and becoming a larger part of the overall profit picture. The gas division shows strong growth not just in revenue, but also in its contribution to the company's earnings, driven by customer growth, favorable weather impacts, and those key acquisitions. Now let's touch on regulation. Unitil's utilities operate under strict state and federal rules, and their financials are heavily influenced by rate cases and regulatory approvals. For example, Fitchburg in Massachusetts is involved in several key proceedings, including a performance-based rate making plan and updates to their gas system enhance program. These regulatory decisions are crucial for their ability to recover costs and earn a fair return. They're also looking to acquire 3 water companies, Aquarian Water Company of Massachusetts, New Hampshire, and Abenaki Water Company. This is a major expansion into the water utility sector and is still pending regulatory approval. This is a major expansion into the water utility sector and is still pending regulatory approval. It's a big strategic move that could significantly change Unitil's makeup if approved. Fitchburg is also dealing with complex renewable energy contracts and procurements in Massachusetts related to offshore wind and other clean energy sources. These are long-term commitments with significant financial implications and ongoing regulatory review. Looking at their retirement benefit obligations, the weighted average discount rate used for plan costs improved from 5% to 5.6% for 2025. This is good because a higher discount rate can reduce the company's pension liabilities and benefit costs. The expected long-term rate of return on plan assets remains strong at 7.5%. So what's the story here? Unitil is actively growing through acquisitions like Bangor and is pursuing further expansion into water utilities. Their gas business is performing strongly with good customer growth and favorable weather impacts. The electric side is a bit more complex with customers shifting to third-party suppliers, but their adjusted margins show underlying strength. The increased debt and interest expenses are a direct consequence of their growth strategy and investments, but the company's credit facility offers a good amount of liquidity. The regulatory landscape is always a challenge for utilities, but Unitil seems to be navigating it effectively with rate case approvals and various program filings. Their focus on grid modernization and renewable energy shows a forward-looking approach. Overall, Unitil appears to be a stable company focused on growth and modernization while managing regulatory complexities and rising interest cost. The acquisitions, though demanding on resources, are expanding their customer base and markets. What's your take on Unitil's strategy and its latest financial results? Let us know in the comments below. If you found this breakdown useful, give this video a thumbs up and be sure to subscribe for more dives into corporate filings. Thanks for watching and we'll see you next time.